guys again. This is chapter 8, and this is one of the most important chapters in this advanced trading strategy and concepts because it is dealing with contracting triangles. Now, contracting triangles are extremely common for the currency markets. They are to be expected all over the place. You have to imagine that prices have the tendency to trend only in less than 40% of the time, and the rest of 70 something, the rest of almost 64% of the time it is ranging or consolidating. Now, when something is consolidating, then the most common way of making a consolidation is in a triangle, in a contracting triangle. There are also expanding triangles, but expanding triangles are different, not that are different, are extremely rare. So when you see one that actually respects all the rules, you might take that into consideration and take a good look at it, because they are extremely rare. Contracting triangles are one of the most common consolidation patterns, and if a trader comes to understand such a pattern, it is surely going to have an easier life when trading. These patterns are extremely tricky because they can be both continuation patterns as well as reversal patterns. They should be treated differently depending on the case, if you are looking at a continuation pattern or if you are looking at a reversal pattern. If it is a continuation pattern, then you will see that we will have a measure move for it, a thrust of a triangle, or if it is a reversal pattern, that the measure move should not be taken into consideration, but you will see what is going to be the proper target for when price breaks out of a contracting triangle that actually is a reversal pattern. They should be treated differently depending on the early identification stage, and contracting triangles are patterns to be found when using the Heliotrope theory on Kantian waves. They are coming in the form of a fourth wave type or a B wave type when they are continuation patterns, and in the form of as being part of a complex correction, like a double or a triple combination. And in this case, they are reversal patterns and imply previous highs or lows should be taken. So as you can see, a lot of let's say uses for the contracting triangle, and this chapter, told you, one of the most important chapter of this educational series, will contain 10 different recordings, and these recordings for the first part of the chapter, for the first subchapter, so to say, I will try to show you how to early identify such a pattern. I identify such a pattern, and this part will have 4 different recordings. We will take a look at the difference between a continuation and a reversal patterns in the form of these contracting triangles, and what are the early signs like retracement between the legs of a triangle, and so on and so forth. And the second subchapter will deal with how to actually trade such a pattern, what to look for, the concept of the 50% line of the triangle, what it means. Well, I'm telling you that it means that the 50% line that you may draw out of wave A, the first leg of a triangle, should give you an idea, an educated guess about the possibility, about the probable place where the contracting triangle is going to end. The second subchapter will actually have 6 different recordings, mainly because we will treat different examples on different time frames, all presented in part 1, part 2, and so on and so forth, with clear examples and on them, and you will see that after watching these recordings, basically you will have a better understanding on how to treat contracting triangles. What you're seeing here, this is a 1 hour chart, and this 1 hour chart is being this 1 hour chart is being displayed on the US dollar, Canadian dollar, and this is basically the subchapter, the first subchapter, the early identification, and you will see two situations in which a contracting triangle appears. Either is a continuation pattern, and the continuation pattern may appear as a fourth wave or a B wave, judging by Elliott-Wave theory, or a reversal pattern. A reversal pattern, that is a contracting triangle as being part of a complex correction like a double combination or even a triple combination. And we will analyze a couple of current market situations. And one of the examples that I want to show you is this US dollar Canadian dollar 1 hour chart. Now this is a 1 hour chart, but as you will see this structure here. This structure here, it is a contracting triangle. But if you look, this is a contracting triangle. But if you look at where price comes, so price is coming from the downside, okay? So price coming from the downside, consolidates in this contracting triangle, and then breaks also to the downside. Now in this case, this is being called, let's write here, this is being called a contracting triangle. And there is a reversal. Usually, this type of contracting triangles as a reversal pattern. What it means as a reversal pattern, it means that the price coming from the downside consolidates in a contracting triangle and then breaks into the same direction it enters. Or, for example, price coming from the upside consolidates in a contracting triangle and enters into the same and exits into the same direction it enters. Such a reversal, such a triangle that breaks into the same direction the price entered in the first instance, it is being called a reversal pattern. And usually, when you have such a triangle, it is being part out of a complex correction, or previous complex correction. So you should look at the price action before this triangle. So price coming from the downside, from the upside to the downside. So probably this here. So probably this is a complex correction with this leg of this correction to be the contracting triangle. Normally, if you are familiar with Elliott-Wave theory, such a complex correction might be here an A, a B, and C, then this should be an X wave, and then this triangle here, the contracting triangle. Now, one important thing to keep in mind when dealing with contracting triangle is that under such a pattern, the first leg of the contracting triangle, namely wave A, so wave A, this is the first leg of the triangle, okay? So wave A is the longest wave in the triangle, and all the future legs to come under such a pattern should be shorter than the previous leg. So this is wave A, and this is the B wave. As you can see, the B wave, this is the B wave. As you can see, the B wave, it is shorter than wave A, okay? Then the next leg, it is being called the C wave. The legs of a triangle under the Elliott-Wave theory are being labeled with A, B, C, D, E, 5 legs. So A, B, C, then as you can see, the C wave also shorter than the B wave, then, sorry, I missed up something. So A, because this is part of this is a reversal pattern, X, then A, B, C, C shorter than wave B, and the D wave here, and the E wave here, and this should be the end of a correction. And what you're seeing here with A, B, C, X, A, B, C, D, E, this is being called a double combination. combination. So this is being called a double combination or a double correction. Because it is being formed out of two corrections, A, B, C. This is one correction. Then an intermediary X wave, and then a second correction, A, B, C, D, E. The second correction is our contracting triangle, and in this case is a reversal pattern. Whenever you see a contracting triangle that breaks into the same direction that the price enters in the initial phase, it is being part either of a double combination, either of a triple combination. So on a triple combination you have A, B, C, X, and then another A, B, C, and X, and only after that A, B, C, D, E, and this should be the end of the correction. And basically, in terms of value at wave, all this move here, this double correction, should be labeled only one type of one wave. I don't know, in here probably an X wave over higher D or a B wave. This is not the purpose of this recording. The purpose of this recording is to show you a contracting triangle as a reversal pattern. Now, the next recording, on the second part, we're going to take a look at the same pair here. We're going to take a look at the contracting triangle in form of a continuation pattern, and we have such a triangle here. Okay? So, till next time, stay safe on the markets.